And we're here for our quick daily market update. Gonna keep things quick, on point, get you guys out of here. It's the same message all the time. We're all about consistency. That's what's gonna make you profitable over the long term, is being consistent in your approach to the marketplace. Let's have a look at what's going on in the marketplace today. On the news aspect, by the way, there's we just had news come out on core retail sales, manufacturing, import prices, so on and so forth. Not really going to impact us too much. We're waiting to see how the overall market, when it begins, responds to that. And right now, we've got some pretty steady, heavy trends in the marketplace going on. So what we're looking for on the S&P, we're looking for long trading opportunities. Just like we saw yesterday, it's been on this tear straight up. Of course, we need to see a pullback in order for us to be able to participate. So, obviously we're in a long bias on the 4-hour. We're in a long bias down with the 30-minute. We'd like to see this market pull back a little bit, make lower highs, lower lows. And then when it snaps back in the direction of that market bias, we'll go long, take that long trading opportunity, right? Over here in crude, same thing. We've got long trading opportunities. Our 4-hour is long, very long. You can see the gap there. 4 hours long, 30 minutes long. We're looking for long trading opportunities. That's gonna look like what we saw yesterday, where we made lower highs and lower lows, lower highs, lower lows, and then we can trade that breakout as the market pops back in the direction of its current market bias. This trade yesterday, just like the one that we had on crude a couple of days ago, you're at 530 of risk, and the our goal is to keep it at 500 or lower. So this wouldn't actually be a trade unless you went down to micros and traded multiple micros. And that's something we talked about in previous sessions, is when you've got something where your risk is greater than your maximum threshold, you've got two choices. One, you don't trade it, or two, you trade it with a lower lot size or change your lot size to accommodate so that you can lessen the risk and still be able to take that trade. So this is not a trade that's being counted on the model portfolio that we've been following. But you can see, again, did follow that same pattern, strong trend, market pulled back, broke out in the direction of that market bias, and we can see how it's continued to move on. Gold, however, did not continue. Gold broke up here and did not continue its pattern. That 1800 level has been tough. It's a big resistance point for us. It hit quite a bit. It did manage to close barely above it, but just could not continue on. And we've seen it fall back now off of 1800. The bias today is mixed at this point, so we don't have any trading opportunities today in gold. So we're gonna stay back, stay on the sidelines, and wait and see what comes of what comes of the setups in future days. But for right now, we don't have anything to do at all on gold. I would keep an eye on that 1800 level though. If it does break it, I really do feel like that's going to be the opportunity for that to continue running a little bit higher. But until it does, there's nothing for us to do. Until the market bias gets back into a confirmed direction, we don't really have anything to do. So we can watch the S&P, see if we can get get an opportunity to go longer here on the S&P, and we can watch crude to see if we have any opportunities there. Both of these are going to come in the form of lower highs and lower lows. So on a pullback, we'll want to start looking for buying opportunities as this pulls back, utilizing that BTX method. All right, so that's it. Going to keep it short and simple, leave it here. You guys have a great weekend. Have a good trading day today.